All right, well, let's get in our first guest on the program. Mark Matthews is with us, Bank Julius Baer and Company. Mark, good morning. Good to have you with us here. Thank you very much. And this is what we were talking about as you coming on, that markets here, maybe they got elections on their mind, and naturally so, right? We're in the thick of it. So a bit of subdued kind of price action, even as global markets are doing well. And there is this long-awaited turn down in data, that important monthly jobs data, which has finally happened. And we've seen a very large 20-25 basis point sell-off in yields. Your thoughts, Mark?
Well, just recapping everything you said, I agree that India is watching closely the election count. And of course, we won't know for some time. But my own sense is that regardless of the number of seats that BJP get in the Lok Sabha, unless they lose the election, which I think we can safely say they won't, we will get a continuity in pro-business policies. And I won't be particularly disappointed if they don't get a high number of seats. I think there's enough velocity in the economy based on the reforms that have already happened to take it forward from here. And of course, if we get more reforms because they get a much higher majority than they had in the last election, well, then that's even better. But I wouldn't dislike India no matter what the outcome is. And as for the Federal Reserve, they would clearly be happy to see the soft labor report. I believe there's going to be another labor report that comes out between now and the next Fed meeting. So things can happen in between. The most important number that we have to look forward to as far as interest rates go is next week's CPI inflation report for the month of April. And the Cleveland Federal Reserve's nowcast, which has historically been quite accurate, is basically telling us it's going to be the same number as it was in March, which on a headline year-on-year basis is 3.5%. So that's not good. Therefore, I don't see a big collapse coming in Treasury yields until we get more confirmation of softer data. But I do think that the S&P now just 1.4% below its previous all-time high. If it can break above that, I think it can actually push higher, because if the economy is strong, earnings will be strong, and ultimately earnings are what take markets up.
Absolutely. So Mark, hi, good morning, and always great speaking to you. I want to understand from you how to approach the markets from here on, the Indian markets. If you're saying that BJP in all likelihood could go through and there could be another term for them, post the elections, what do you do? Because this has been an uptrending market, right? Do you think we can build on to our gains? And if yes, what are your preferences now? I mean, where do they lie, in India particularly?
I mean, I don't want to get in trouble with the regulator, but I think the mid-cap space is the place to be if BJP do very well, because more reform means a much faster, migration toward the manufacturing sector in India, more infrastructure, more labor laws, flexibility in labor laws, more FDI coming in the country, higher value-added products being made in the country. And, the Nifty, of course, has many good companies. I'm not saying it doesn't, but it's not really where the real manufacturing base of the country lies. That's in the mid-cap space. So I know it's done very well, and there's some concern over valuations, but I suspect going forward, it'll still be a long-term outperformer.
Hi, Mark. Good morning. And I take that point on board. The mid-caps, the first time in quite a long while, I've heard a couple of MNCs who have listed companies here in India. They're talking about making the Indian listed entity a manufacturing hub and exports out of India. Companies like RHI Magnesita, Vesuvius as well. Those are the interactions I had in the last 10 days or so. But Mark, India has been the big outperformer in the last 12 months or so. However, if I look at it on a year-to-date basis, comparison with China, even the S&P 500, even the Russian index, actually we are relatively underperforming in dollar terms. Do you think once the election verdict is out of the way, we'll get back to our outperforming base, even though valuations are relatively higher?
Well, I don't cover Russia anymore, so I can't comment on that. And I've already spoken about the U.S., which I think will continue to do well this year. Perhaps not, it won't do on an annualized basis what it's done so far this year, because that would be something like a 30% return. I don't see that happening. But China's the big one that I think has surprised everybody this year. And my sense is will continue to surprise people. Now it's built kind of momentum. It's now a bull market officially. What I mean by that is from its low in January, the Chinese markets are all, the indices are all up over 20%. So technically that means a bull market. And there's a few things going on. Most pertinent is that a lot of hints have been coming out about the government wanting to remove excess inventory in the property sector. And that's really been the difficulty in their economy. It's been dragged down by the property sector, which they're right to deal with, but there was no pleasant way to approach this massive overcapacity in inventory. So they're doing it. And if the government can take off some of that inventory by basically nationalizing it, probably making it into public housing, then there would be a much healthier base in the property sector. Prices would probably stop going down. And in China, property is the number one asset of most households. So if it stops going down, their confidence returns. All of that is possible, I think. There's a big meeting in July, the party plenum meeting, which they were supposed to do about a year ago, but they kept on delaying it. And anyway, the hints have been that they will address this situation of massive excess inventories in the property sector. If they do that, it's meaningful. Even if they don't do it, it's still a market which is indisputably cheap. I can't find a single expensive stock in China. Even, their tremendous technology companies like Alibaba and Tencent are, by any measure, extremely undervalued still. So I suspect China will continue to be the stealth outperformer among large markets this year.
Oh.
Mark, there's an election here in India, but there's one in the US as well. What's your sense? Who's got the lead in the US?
Well, there are lots of different polls, and they show different things. But if you aggregate the polls, Trump does have a lead, and he's in the lead in the betting websites too. But that's probably simply because the people who are putting on bets are looking at the polls. It's all up in the air. If the economy continues to be strong, that of course favors Biden. And if the oil price comes down, for example, if there is a ceasefire in the Middle East, that would probably be helpful for getting the oil price down, and that would be a huge boost for him. So it's too early to say, but if I had to put money on one, I would probably still go for Trump, just because there are two main backbones of the Democrat base which seem to be shifting away from it. The young people and Hispanics. And I don't remember what percent young people are of the population, but Hispanics are about 17%. Young people, of course, would be over 20. And anyway, both of them are expressing a lot of dissatisfaction toward this administration. Inflation would be one big reason why, and probably a clash with the traditional values that Hispanic people have would be an explanatory factor behind their seeming move toward the Republican Party.
Okay, Mark, thank you for your time and speaking to us on the channel. Appreciate it.